Good morning and happy Friday. Welcome back to the Daily Grind. I'm your host, Chump Change. This is live and recorded. For anybody that might be new here, what we typically do is go over crypto news in the space or news in general. I update myself, bring you guys along for the ride. Let's see who's here in the house. Mr. Max Voltage. Good morning, sir. Happy Friday. Let's see. Tim I Am Crypto, Carl Coat, Andrew Masad. Good morning, sir. We have Crypto Addict, Lawnmower Man. Good morning. Steven Cicero, Son of a Rabbit. Black Hat Team, Ogre, what's up, man? Good to see you. We have Peepaw Bill, what's up, dude? Good to see you. Alexander Fleener, good morning, sir. And Much Train. Anybody else I may have missed, I apologize. Let's get into it. All right, Bitcoin looking like a $68,350. We got Ethereum at 3,800 just about. Pepe's green on the day, up about 8%. I think it's making up for yesterday. It was in the deep red if I'm not mistaken. Solana, we get 168 bucks. Let's see, Caspa just under 14 cents. We have Litecoin at $84. Let's see, anything else jumping out at me? ETC is at 30 bucks. I think it went through its fifth inning yesterday if I'm not mistaken. We will double check that in a little bit. News today, well, yesterday, right? Our former president was acquitted, or not acquitted, convicted of 34 counts of whatever the hell he was going to trial for. Hush money stuff, I guess. And then we have Ethereum stuff. I want to listen to Anthony Pompliano, see if Ethereum Etf is actually going to be bad or good for crypto. We're going to have to see. All right, let's move on to crypto bubbles. Oh, actually, you know what? I'm going to put a poll in the chat. Did you guys see the Tech Hustler fight and Tacticals fight last night? Did anybody see that? If you did not, we can vote to watch it today if you want to watch it. Let's see. Do you want to watch Friday Combat fight? I'm just gonna put that yes or no. You guys can let me know in the chat. There we go. I put a poll up. All right, crypto bubbles. Holy hell, look at Jasmine. 22.5%. Is anybody into this?
Perfect.
Anybody into this? I don't want to spoil the fight, so I didn't want to say who won or lost, but I want to know if you guys want to watch it. If it's something you want to watch, we could run over it. It's like a couple minutes. It's certainly not that long of a fight, but Jasmine again up 22.6%. We have AR up 18.4. This is Arweave. Nice. $44.71. We got Celestia actually down 10.55. Sorry, down 8.2% to $10.55. Ordi up 10.3% to $50.41. See, we got Beam up 11.4% to 2 cents, almost 3 cents. Wow. What's Jasmine at? Jasmine's at 3 cents. Wow. Is anybody into Jasmine? Let me know. We have Brett. This is that meme coin. 6.5% up on the day. It's almost 9.5 cents. 9.3. Nice. Daddy Chill said I'm up on Jasmine too. Nice, dude. Congrats. That's awesome. I'm way up on Jasmine, says DJ Death Star. Hell yeah, dude. Good for you, man. You guys deserve it. Theta Network, we're up down 4.4% to $2.16. Again, Pepe's up 6.7%. Let's see. Near Protocol is $7.30. Are you guys into this token or coin rather? I don't know. I started DCAing a little bit into it. I want to see what happens with it. It's ranked 17, good, $7.89 billion market cap. I don't know. Them name dropping this one on the news really gets me like my gears turning. So I want to see what happens with Near Protocol. Let's see. Carl Code. Yeah, that one's not doing so well. All right, flashbang. Let's see. We have the Fear and Greed Index 73. Honestly, this looks perfect. Couldn't say it better myself. This is it's good. We're still floating sideways. Everything's hanging on. I think the market overall is looking really good. Kind of building a steady base throughout May. June is tomorrow, so we're going to we're gonna see what happens in the next month. Let's get over here. CoinGecko. We're gonna check out the trending coins. Let me just refresh. Beer Coin. Rud Puts pumping this thing on a Friday. Look at that. 15.3% up on the day. We have Sora, whatever that is, up 0.6%, and then Super Trump is down 7.5%. What the hell is Super Trump? Freaking meme coins. What's up, Yusuf? Good to see you, buddy. Let's see. Aussie, what's up, dude? Good to see you. Good morning, sir. Time for market to launch, dude. Let's see, Dan R. Let's see. All right, top 10 coins by coin market cap over on CoinGecko. We get Bitcoin, Ethereum, Tether, BNB, Solana, Lido Staked Ether, USDC, XRP, Dogecoin, and Cardano.
Perfect.
In 10th place still. I want Cardano to hold 10th place, but we're gonna have to see. We have Toncoin trailing right behind it. Sorry, trailing right behind it at a little bit more than 500 million down. So they're both at a $15 billion market cap, 15.9 versus 15.4. Again, Toncoin's in 11th place. So Toncoin wasn't like 10th and I think 9th actually at one point, but who knows? I don't know why it's having such a big pullback. Let's see, scroll through this. Near Protocol over here says it's in 20th place. Interesting. $7.9 billion market cap. Uniswap's above that. What's going on with the Uniswap stuff? Actually, I haven't heard much about that. Isn't the SEC going after them for some shit? Crypto Mikkel, good morning, sir. Good to see you, buddy. Good to see you. All right, 56% of you. We're just gonna kill this then. I'm just gonna give you guys the answer. What happened? Nobody wants to watch the Karate Combat fight. 56% of you say no. So that's fine. I won't bore you with that. But the fight last night was with technicals and tactical investing and Tech Hustler. So that was pretty interesting. Pretty interesting to say the least. All right, Caspa again, to just about 14 cents. Caspa's looking really good though. I think it's doing well. I think it is doing well. Let's go to the max chart quick. I don't know what's going on. I think it's working its way for another leg up, but I don't know. It's kind of slowing down. Let's see what happens, I guess. It's doing pretty well though. Pretty well. All right, let's move on to the mining segment of things. Then we'll get into the news bit. All right, so you guys know I like to timestamp this stuff. Let me just refresh this, make sure. All right, so we got the KS5 Pro 21 terahash unit making $83.60 a day. We got the 20 terahash KS5 over here making $79.61. We got the Ice River KS5L 12 terahash unit making $43.93. We have Dragon Ball Miner, whatever this one is. I think it's the same thing as the IB-Link BMKS Max. That is just rebranded, if I had to guess. Both making $37.42 a day. We have the Windminer K9 10.3 terahash unit making $36.79. We got the AL box over here in 8th place now. 360 gigahash is 180 watts, making $32.11 a day. Let's see what Lithium's at. Where is Lithium? Oh wow, look at that. It's finally up on the day. $1.63. $1.63. Lithium's been taking a friggin' real hit lately. It's been brutal. Last month's really been taking a hit, but we'll have to see. No, Steven Cicero. Zero chance. All right, Ice River KS3 8 terahash unit making $27 a day. We have the KS3M making $17.88. We have the Alpha Packs DG1 $17.19. Let's see. The Antminer L7 9050. You guys know I got this thing down in Terra Hosting. Shout out to them. 9.5 cents over here, making 13 point. Sorry, you know I'm making more than that actually, because this is 10 cents. But regardless, 10 cents per kilowatt hour, making $13 a day. This is pretty amazing. Crypto Frank, what's up, dude? Duke and you, sir.
Perfect.
Good to see you in the chat. Let's see. We have the, where's the X16Q down here? My Jazz Miner X16Q. Mining CAU is making $3.74 a day. Did ETHW like fall off a cliff? Because that was most profitable. Let me see. Is there like more people mining it now or something? Because I swear it was like back in April it was like making $8 a day, and it's really not that much different. I don't know what happened with ETHW. Weird, very strange. Anyways, yeah, it was like making like $8 a day, unless this calculator over here was wrong, which it absolutely could be. Scrolling down a little bit, let's see the Ice River KS0 Pro. You guys know I got these running on solar in my solar trailer. Man, I can't wait for my panels and stuff to show up. But 200 gigahash unit at 100 watts, making 63 cents a day at 10 cents kilowatt hour. Obviously mine is entirely profit, but it's about $1 a day or so on each unit. Let's see, scrolling down, where is my S19K? Where are you at? Where are you at? I probably already passed it. Did I already pass it? Yeah, I probably already did. S19K. Oh, there you are. Look at you making money today.
Perfect.
We got the 120 terahash unit making 19 cents a day. I will get paid back in 238 months.
Bruh.
Oh, it's miserable. All right, moving on. GPUs. We got a lot of stuff I want to cover today. Let's see what we got over here. Looks like Able top of the charts, the 170HX. We got Ironfish and Pyron, nice, top of the charts. Cortex over here on the 4080. Looks like Able's really still taking it. Interesting, very interesting. Ironfish and Pyron. Let me see. Able, Abelian, is that how you say that? Able. Oh geez, what in the hell? Maybe that thing didn't catch up, but was this? Yeah, that was last night. Last night it took a dump, huh? Jeez. Very interesting. Is this did this get dumped on, or is it gonna come back? Still got a $20 million market cap. Crazy. That's crazy. All right. Let's see. Yeah, Able seems to be across the chart right now, but I think Ironfish and Pyron will probably take it back. Conflux and Pyron, interesting. On what card is that? Actually, 3080. Nice. 3070. Conflux and Pyron, same thing. Ironfish and Pyron, 4070. Got some Xano on the 6950 XT. We got Ravencoin on the 6800 XT. Interesting. Very interesting. We got Flux on the 2080. Look at that. Flux. What's Flux looking like? If you guys have any questions, at me in the chat. Let's see. 96 cents. Flux. Not looking too bad. Not looking too bad. Flux is actually looking pretty good. It's like actually having some sort of a healthy year, which is nice. Interesting. Too bad I sold out of it.
Bruh.
Idiot. No, that's all right. All right, let's look over here. The AMD, this is CPUs. AMD Epic 7713. We got Veriscoin and Monero, top of the charts for all the CPUs. What in the hell? Look at this. What happened to Zephyr? Did Zephyr die? Where's Zephyr at? That's usually everywhere. $3.31. What happened to Zephyr? Why is it damn. I guess let's just check out XMR. Monero just pumping. 146 bucks. Oh yeah, I guess Monero's pumping. It's been doing pretty good over the last month. I mean, I know these charts are ass, but look at that. Nice. What do they call this? The fish hook or something? That's where like a lot of traders like to get in on, right here. Interesting. Very neat. Very neat. All right, moving on. Miningpoolstats.stream. Let's see what we got over here for new coins. Same stuff as yesterday. Cobra Dag. This is the Pyron hash fork about 2 days ago. Not too bad. Yeah, bunch of meme coins, really, to be honest. Really nothing else. Let's see. All right, Ethereum Classic went through its fifth inning. I don't know why they call it a halving, but it's fifth inning. 2.56 to 2.048 blocks. I mean, ETC per block, rather. Then we have Kyla Coin is actually going through its mining algorithm change. The Flex this is a hard fork algo change in 4 hours. Crazy. We have Gold Cash going through its halving in 14 days. We have CAU going through its hydro fork, whatever that hard fork is, 23 days from now. We have Pepe. What's going on here? Is this new? I didn't see this the other day. Pepe is going through a halving. Really? 500,000 to 250,000 block reward. I didn't know that. That's kind of neat. Oh, look it. Oh man, is this the button? It is the button. Good morning, Geek of All Trades. Thought I messed it up. All right, let's get on to the news segment of things. That's really it. Nothing else. All right, over here, Altcoin Daily tweeted this. Ripple's Brad Garlinghouse foresees XRP, Solana, and Cardano ETFs. What do you guys think about this? I think Solana for sure. I don't know about XRP. And I'd like to see a Cardano one, but Cardano, I don't know. I don't know if enough people really know about it, to be honest. I mean, I'm sure like the OGs and stuff do, but like no one really talks about Cardano, so I don't know. I guess you guys will let me know. All right, since we don't want to watch the fight from last night, this is the highlight. This is why technicals won. I mean, why do I keep saying technicals? Tactical investing. Why can't I say that right? Tactical investing. Tactical investing won the fight against Tech Hustler last night. If you guys didn't see this, this is the highlight here. This was the big blow that made him win. Yep, that was it. That was it. Almost got knocked out, but it was a good fight. They both did a good job, and it takes a lot of balls to get in the ring for sure. But damn, yeah, it was a he got hammered. he got hit hard. He got hit hard. I'm not gonna lie, but it was definitely a good fight. It was a good fight. It was a tie the first round. Second round definitely went to tactical investing, and then third round was kind of, it was almost even, but I think it went a little bit more towards tech. But yeah, nonetheless, that was the shot that won the fight 100%. All right, let's get into the news segment of things. We're going to see what they got to say over here. How will former President Trump's guilty verdict impact fundraising? Let's just see. We're just going to go through a few things. This is the only real political part of it, so I apologize to everybody that doesn't like that stuff. Let's do it.
Bring in CNBC.com political finance reporter Brian Schwartz. Brian, as the fundraising emails are both out from both sides, what do you expect to happen next from your vantage point?
Well, we've been making calls about this for the last 48 hours in the build up to what we thought was going to be a guilty verdict. And, I haven't found a single, Republican mega donor or business leader aligned with the Republican Party who really cared about this verdict. And they're actually doubling and tripling down in their support for Donald Trump as we speak. There's a variety of events being scheduled in the coming weeks, in fact, that have been scheduled to be prior to the guilty verdict that we've seen tonight. And so, I really don't expect this to impact Donald Trump's fundraising. I think, in fact, it's going to help him raise money, because a lot of the business leaders that are in his camp are just moving and continuing to move in support of him. We heard today that hedge fund executive Bill Ackman is likely to support Donald Trump, and we heard about this in the build-up to this guilty verdict. So we're not really sure if this could be a negative for Donald Trump in fundraising, not yet, but we are definitely certain that he is going to see a boom from a lot of major business leaders that are slowly moving into his camp or are there already.
Right. So this notion that it's rigged and that this is further evidence, he says, that they are going after him politically. That's something that's resonating with donors, big donors, too, financiers. I mentioned Steven Schwartzman has come back to Trump. Nelson Peltz has come back to Trump after they denounced him after January 6th.
Right.
But given the state of the country, given what they see from the Biden administration, given issues that we're dealing with here, like immigration and anti-Semitism, which all seem much bigger than all of this, they're going to continue to back him now that he's a felon. Yeah,
that's right. I mean, when you look at it, I don't know if they're thinking about whether they believe Trump in how he says things are rigged regarding the election, these claims that he's made about that, or if this process.
I forgot I had it on 1.2 from yesterday. My bad.
This has been rigged. I don't know if they go that far, but they're definitely looking at the state of the country, and in their view, things are just not going as well as they want it to be. Right? You mentioned what's happening in Israel. You mentioned what's happening at the border, and really these are just pushing people into Trump's camp. But you really just take a step back, and it is, to me, pretty fascinating. Well, these are some of the same people who cried about when January 6th took place. These people who really were upset when the riot took place on Capitol Hill on January 6, 2021, and really denounced Trump. If not denounced Trump, they denounced what took place on Capitol Hill. And you fast forward to today, many of those very same people are back with Trump anyway. And I think that's really, really notable. But what we're going to see going forward past this guilty verdict, kind of a coalescing around Donald Trump among a variety of different business leaders. You mentioned Steve Schwarzman. He made that announcement about a week ago. And it's so, this is pretty notable about the timing of these announcements, timing of things we're hearing. And based on the calls I've been making in the last 48 hours, things on the fundraising fund are necessarily not going to go against him at this time.
All right. Well, shout out to them for that nonsense. All right, let's move on real quick. Look at this. So this is actually Nismo put this in my chat in Geek of All Trades. I'm assuming this is what you're talking about. Go check this out. But look at this. We heard a little bit from Locotech. Ben over here actually reinventing the next plug and play miner that can adapt to the needs of any miner, whether large or small. Additionally, it will connect via USB, an open source communication protocol. Below is an early prototype of Locotech's Hashblade from Factor used for testing. I think I'm going to say factory used for testing. That's cool. So that's the 1x slot they were talking about. Look at this. This is nice to see, actually, that they've actually been doing some shit in the background, because we haven't heard anything in a while. Nismo, thank you again for posting this. Actually, that's a big deal. So this is supposed to be the new Hashblade that's like 149 watts, if I'm not mistaken, for like, is it like 2 gigahashes? Am I wrong? I'm wrong saying that. I think it's like 1 point something gigahashes on Litecoin, which is crazy because the L7 rather is a 9050, right? So for this thing to be 149 watts at like almost 2 gigahashes, that's insane. That's crazy though. Good shit. Good stuff to shout out to Locatech and Ben. Good stuff for them. That's awesome. All right, let's move on. Big tech's valuations are quite full but reasonable, says somebody over here on CNBC. Let's do it. Barclays, I guess.
Joining us here at Post 9 at the New York Stock Exchange. Barclays head of U.S. equity strategy, the new Krishna. Great to have you. Right. Thanks for coming. What do you mean by valuations look pretty full? How full?
Quite full. So if you look at big tech, for example, trading at about 29 times forward earnings, quite full. But when you adjust it for the growth of their earnings, looks quite reasonable. But when you start stepping out, the rest of S&P outside of tech, trading at around, call it 19 times roughly, we think the fair value is closer to 17.5. So probably around a handle to handle and a half rich, but that's not too out of whack. But the point is that in aggregate with S&P, when you put it together at 21.5 times forward earnings, that's quite full.
Are you suggesting there's downside risk to your year-end target?
No. In fact, what I would argue is that there's upside risk to our targets. Our base case is 5,300. We're pretty close to that. But the upside risk comes from the fact that the market and the economy has continued to surprise for 2 years in a row now. So if you continue on that path roughly, and most importantly, if big tech continues on the path of beat and raise we have seen in the last 18 months, then you could well see S&P hitting 6,000 by the end of the year.
Not this year. End of this year?
It can.
Okay.
Yeah.
I've seen a lot of 6s on 25, but not many on 24.
So I think it's a question of probabilities, right? Our base case, call it 55, 60% probability. The downside case of S&P hitting 4,500 is probably a 10% probability. But then the upside, which is more than the downside, is probably around 30%, right? So not likely, but still, we're in a market where the surprises to the upside, broadly speaking, in the economy level, have continued to set U.S. exceptionalism out there.
What does that mean for asset allocation? If I'm listening to you and you're telling me that the market is priced very fully at these levels, largely due to tech, which does happen to surprise to the upside with earnings, do I put more money to work in big tech despite the multiple that may be a little rich compared to history, or do I opt for something that may be more of a catch-up trade here?
Very good question. So I'll try to answer it in a couple of ways. One is we absolutely think that you need to have the market weight exposure to tech. There's no running away from that, because we have insisted for almost 18 months now that you have to learn to live with narrowness, and the narrowness will be with us for a while, right? But that doesn't mean there are not opportunities outside of tech. The question is, how do you go and find that? It is certainly not in small caps. We think it's very risky. But we do think that the rest of 494 of S&P, if you wear a quality hat, if you wear a growth hat, and if you try and approximate the kind of financial metrics which big tech is delivering, you can't match it, but you can try and approach it. I think there's a way in which you can pick stocks. Don't forget that right now we are at 20-year lows in correlations. In other words, dispersion is very high. This is a stock picker's delight. Unfortunately, most of the stock pickers are underperforming, which shows you the challenge of dealing with a concentrated market, which also happens to be a stock picker's market.
A concentrated market in the sense that the indexes themselves are concentrated, not necessarily the positions of the stock pickers.
Right, and to your point about big tech, the visibility over the next 2 to 4 quarters is very clear and extremely strong. Think about it. The combined market cap of 6 stocks is over 14 trillion right now. And their growth rate in terms of the realized earnings in this quarter is over 50%. Their forward revisions after earnings is up more than 20%. The good news is for the rest of S&P also, revisions are finally up, but around 5%. So you see the huge delta between the two, and that's the reason why you cannot afford not to be involved in big tech, because you have visibility. At some point, you may need to get off the train to some extent, but it's not right now.
Interesting. All right, moving on to trouble in cloud computing begins to form as AI threats loom. Let's see what they got to say again over here on
Told you about
CNBC.
Salesforce's soft quarter. Its shares are dragging the market lower, but might it just be the wrong software business model for the coming age of AI? Deirdre Bosa is looking at potential trouble in the cloud for today's Tech Check. Deirdre?
So, Kelly, enterprise software, it is the pain trade of the year, and Salesforce just added more momentum to that. But there is one corner that could be poised to recover and will benefit more from Gen AI than the traditional SaaS model that the likes of Salesforce has. That would be consumption-based models. Business models like Snowflake, Datadog, Confluence, MongoDB, which reports tonight, will be another piece of this enterprise software picture. Here's the case for it. If Gen AI applications are compute heavy, they require more usage of cloud computing resources or API calls, then consumption-based models naturally scale with the customer needs versus a Salesforce and others, which primarily sells on a subscription basis, often structured around a per-seat model that is charging based on the number of users that have access to the software. That is great when workforces are growing, but not so great if generative AI is making workforces more efficient and smaller. So you essentially have less seats, even though Gen AI workloads are increasing. I spoke exclusively to Boxio, Aaron Levy, on where we are in this cycle. Have a listen.
If you look at cloud computing, let's say, we are in 2006, 2007 in terms of cloud computing adoption relative to where we are with AI. So we have to kind of put ourselves back in that kind of position of how early we are in this technology cycle, and ultimately then how much upside and potential there is as it fully rolls out.
So that's where many companies are today. They all know that they need to have AI strategies and probably will eventually, but they're trying to figure out what exactly that looks like, how much they build internally versus how much they're spending on outside platforms. And Kelly, that's why investors are trying to figure out as well. Enterprise software has been such a rough place to be invested this year, over the last year, really. But there's some divergences occurring, and that consumption-based model is an interesting one in the age of Gen AI.
It's an interesting sort of lesson in, I guess, second level or derivative thinking. When you said, okay, so here comes AI, and it's a threat to some of these SaaS companies, software as a service companies, where they're basically collecting money on a per capita basis. Well, there may be fewer capitas.
Exactly. Less seats, right? And you see that like an example like Klarna, right, which said that it was able to get rid of 700 employees, but then it put those workloads of those 700 employees into generative AI. So if you're a company selling your software to Klarna by seats and subscription, there's a lot less seats to sell to, even though their usage of Gen AI, which requires compute power, goes up. You understood it perfectly, Tyler.
Yeah, well, it's interesting, and it's derivative thinking. It may or may not be the case, right? I mean, we don't know. We will find out as we find out on.
But there's a lot of unintended effects, right, of Gen AI. Like at the beginning, we thought that it was going to hurt blue-collar jobs. Turns out it's white-collar jobs. So while enterprises, while their customers are trying to figure this out, so are investors and so are the workforces.
Deirdre, good to see you. Thank you, Deirdre Bosa.
Somebody asked if she had braces in the chat, and I'm honestly not sure. I was looking, it might be Invisalign or something. Something did look weird, but I don't think she had braces. Nvidia and Microsoft has overshadowed weakness in tech stocks. Let's see what they got to say.
Let's take us to our talk of the tape, the fate of the rally, which has gotten more narrow yet again. So is that a sign of an unhealthy market or one that is just taking another well-deserved breather? Let's ask Dan Greenhouse. He is Chief Strategist for Solus Alternative Asset Management with me here at Post 9. Welcome back.
Thank you, sir.
What's the story with this market? It's been a little bit of a dicey week. We're pacing down 1% on the S&P. Yields are down today, but they've been backing up.
Yep.
Been a little nervous. What's going on?
No, listen, we've had a really good run, really all year. The stat everyone seems to be tossing around, the S&P's up, call it 23 of the last 30 weeks. The type of run that you rarely have ever seen. There was a big rally off the 62 bear market that was comparable, another one or two rallies you could find throughout history. So it's been pretty strong. Obviously, it's come alongside the backup in rates, so I don't really buy into the rate story. We've talked about that. But listen, there is something to the narrowness. It is being driven a lot by some of these AI names. Although I will make one final quick point.
Yeah.
The equal weight index is up, call it 3% through today. That's not great by any means, but it's average. So even if you want to balance out the overweight, so to speak, of NVIDIA, et cetera, you're having a pretty decent year today.
It's not like it's dramatically narrowed. It's just NVIDIA's outsized performance makes it feel that way even more. I mean, for over a 1 week period, for example, tech is up 1.5%. Like everything else is down.
Yeah.
Comm services 0.5%. Then you got discretionary down 1%, materials down 1%, utilities, energy 1.5%. Gets a little worse for financial staples, a little worse for real estate, industrials, and then healthcare is down some 3%.
So real quick on that point, there's a lot of people who come on the network and talk about rates, and stocks, and why aren't we seeing more effect, or what this, that, and the next thing. But to combine the 2 points that we just made, to synergize, if you will, I think you are seeing the effect. Again, as I mentioned, the equal weight's up, call it 2.8, 3% for the year, perfectly average. If you look at the market that way in the context of the backup in rates, call it 380 on the 10-year up to wherever we are now, 4.5, 455, you have seen a dampening effect on the market. It's just been overdone. It's been overburdened, so to speak. That's probably not the right adjective, but we'll go with it, by NVIDIA, by Microsoft, et cetera, et cetera.
Do you think what I just read you, the sector performance, is directly correlated to the backup in rates?
Well, I think
why tech has gone up, why there's been, I go back to what Tony Pasquarello Goldman said, why mega cap continues to outperform and why the money continues to flow, because it's the sword and the shield. It's defense, offense, protection,
large cap tech,
advancement. Yes. Mega caps.
But listen, so yes, the answer to your question, rates does have an impact on flows and on valuations, but you've also had not great reports from Workday, et cetera, et cetera. So there have been some fundamental reasons. Obviously, there's disappointment today with Salesforce,
right? And ServiceNow. You see these stocks. You just don't see these stocks move like they're moving today. It's like if you've gotten a nice bump, and Salesforce hasn't really gotten that much of a bump, but if you've been up and theoretically it's on this AI halo, and the expectations have gone up with your stock price, and then you deliver a dud like they did, especially their outlook. The result right there.
Yeah, I mean,
20%.
this is the flip side of the environment we're in, where there's no tolerance for disappointment. But listen, I mean, any number of people who've come on the network today, I'm sure, and observed that it wasn't too bad of a report. I mean, guidance. I'm not a large tech investor.
Yeah, but the market votes more than the pundit.
But yeah, that's correct. I mean, but obviously it tells you it couldn't have been that great or that average, or else you wouldn't be down, as we see on the screen here, 21%. But listen, you have seen pain throughout tech. Again, we listed a bunch of the names: Workday, Adobe, et cetera, et cetera. It's just the size of NVIDIA, the size of Microsoft, and their performance. Google, obviously, their performance has been so strong, both fundamentally and with respect to price performance, that it's just overwhelming all these other names.
NVIDIA is such an outlier on the week. It's up 6%.
Yeah.
Every other mega cap is negative except for Apple, and that's up just shy of 1%.
But listen,
the
positioning data, the flows to those names are still extraordinary. They're a huge portion of the market.
Yeah.
They are still, to borrow Tony's phrase again, the sword and the shield. They do give you defensive characteristics and offensive characteristics. And so I understand why, as a manager, you'd want to have a tremendous amount of exposure to them.
All right, shout out to CNBC for that. Let's see. I think we get into crypto world now. BlackRock's IBIT becomes the largest spot Bitcoin ETF, surpassing Grayscale. Let's get into it. Hit that like button, guys. Appreciate you for hanging out.
Today, we are on the ground for day 2 of Consensus 2024, one of the largest crypto conferences in the world. BlackRock's IBIT becomes the largest spot Bitcoin ETF, surpassing Grayscale's GBTC. And speaking with us at Consensus, Lynn Martin, president of the NYSE Group, discusses the SEC's approval of a rule change to allow for the creation of Ether ETFs.
I believe that's where they fought last night, too, at Consensus, if I'm not mistaken.
Welcome to CNBC's Crypto World. I'm Jordan Smith in Austin, Texas for day 2 of Consensus 2024. Major cryptocurrencies in the green today, with Bitcoin climbing more than 1.5% back to the $68,000 level as of Eastern. Ether also rising, inching closer to the $3,800 mark. Polygon's Matic token, however, dropping today by nearly 3% to 70 cents. Now, Bitcoin's rise comes as BlackRock's IBIT surpassed Grayscale's GBTC, becoming the largest spot Bitcoin ETF in the U.S. That's according to the product pages for those ETFs, which show IBIT holding nearly $19.5 billion in net assets as of yesterday, and GBTC holding $19.3 billion worth of Bitcoin. Since going live in January, investors have poured billions into IBIT and have withdrawn billions from the Grayscale fund, which is a higher fee than that of others trading right now. Most of the approved spot Bitcoin ETFs have fees of between 0.2% and 0.4%, but the Grayscale Bitcoin Trust charges a 1.5% fee. Buying activity for IBIT increased recently amid bullish sentiment for Bitcoin and the crypto market at large. Exactly 1 week ago, the SEC approved a rule change that would pave the way for ETFs that buy and hold Ether. Yesterday, BlackRock filed an amended S1 form for its proposed spot Ether ETF, which revealed more information about the product. The filing reveals a seed capital investor purchased the initial shares for the proposed ETF and that the net asset value of the trust was $10 million. Now, let's bring it back here to consensus. We told you yesterday that organizers expect about 15,000 people to descend on the Austin Convention Center. That's how many people were here last year. But that said, organizers say there are attendees from more than 100 countries, nearly 7,000 businesses, and asset managers with a collective $3 trillion under management. CoinDesk is hosting this conference, and we spoke with Andy Baer of CoinDesk Indices about what has changed this year compared to the last conference.
Last year, consensus was in April. We were kind of looking over our shoulders, kind of just all happy to still be there. You know, we knew that we had experienced the nadir, the depths, and we were crawling out of it. But the way forward was uncertain at best, right? This idea that we would have Bitcoin ETFs, still unclear. Prosecutions, still unresolved.
Not wrong.
So compared to then, now we're in fantastic shape. We see really kind of a more well-developed, mature business, better risk management practices, less frivolous investing into silly projects. We see standards that have improved through the crisis, and that happens in all kinds of financial markets. Crypto's no exception.
All right, let's jump right into some of our other discussions here at Consensus. At this conference yesterday, the New York Stock Exchange announced a new collaboration with CoinDesk Indices to launch financial products tracking spot Bitcoin prices. Crypto World's Mackenzie Sigalo sat down with Lynn Martin, president of the NYSE Group, yesterday to talk about the new partnership and other developments in digital assets.
You plan in partnership with CoinDesk Indices to list financial products like options that track the spot price of Bitcoin. Walk me through the launch, the timing, and just how significant it is.
Yeah, we're incredibly excited about this announcement in partnership with CoinDesk, who operates the market-leading Bitcoin index, price of Bitcoin, to launch options on that index in the coming months, subject to regulatory approval.
And so I think a lot of the response so far has been very bullish, seeing the NYSE is endorsing Bitcoin in some capacity. Would you characterize this as the exchange embracing Bitcoin as an asset class, or is this really more a reflection of the blockbuster flows that we've seen through these spot Bitcoin ETFs?
We have seen incredible flows since Bitcoin ETFs were allowed to list in January of this year. I think the industry has had about 58 billion in AUM move to the ETF for Bitcoin, which is incredibly exciting. We view this as a next stage of risk management, quite honestly. If the market is looking to manage the risk associated with the price of Bitcoin, this is an excellent way to do that. And I've been saying for a while that for this industry to really move to the next level, the institutional level, you needed the traditional structures and you needed the traditional framework that are well understood by your traditional institutional as well as retail investor to feel comfortable managing risks. ETFs were the first phase of that, and we think options are the next phase of that.
And that is something that you singled out in your press release today, was wide-ranging enthusiasm from institutions in particular. I went through all those 13 Fs that we did a couple weeks back and reached out to the banks that newly had exposure to Bitcoin through these spot ETFs, and many of them were distancing themselves in terms of this being an endorsement of Bitcoin as an asset class and saying that it was more a reflection of what their wealth management clients were asking them for. So from what you're hearing, is institutional money here to stay, or is this more the product du jour for their customers?
I think we're all customer driven, and the way a traditional provider tends to think about it is transparent risk management. That is our job at the New York Stock Exchange, to provide a venue for customers to efficiently manage whatever risk in their portfolio. You take the wealth use case, for example. I can't think of a more traditional asset class in one's portfolio than U.S. equities. So the way we're thinking about it is exactly the same. If you're going to have exposure in your portfolio, we want to be a venue that enables you to efficiently manage risk in a transparent fashion.
So yesterday, the SEC implemented T+1, so we've got one-day settlements. a clear signal that the commission is looking to speed up the market without the help of blockchain. Meanwhile, if you talk to people from the tokenization camp, they're very bullish on this idea of trying to tokenize securities in the same way that they put asset-backed bonds on chain. Is this a race between the two to speed up the market?
Yeah, they're going to tokenize everything eventually.
I think there's no question that the blockchain technology is transformational technology. But when you look at the equities market, you've got to consider all of the aspects of the ecosystem, every part of the value chain, from when an order is accepted by a broker, when it's transmitted to an exchange, when it is matched by an exchange, and then when it clears the exchange. Yesterday's implementation of T+1 is a great sign that newer technology is enabling us to do things more efficiently and faster. I don't know where it will go from here, but we're incredibly excited about T+1 going, touch wood, so well in the equities markets.
Much train I'm just reading the chat. Yeah, I would absolutely, if you're gonna do anything to trade Ogre, that's what I'm doing. Zealous, mining it directly to trade Ogre, and then I'm swapping it to LTC because it's like peanuts to move it. If you swap it to like USDT, it costs you $10 in a fee to get it out of trade Ogre. It's ridiculous. So definitely swap it to LTC and then ship it out.
Would the NYSE ever consider tokenizing securities itself, or be open to blockchain tech more broadly to potentially one day achieve 24-hour trading?
I don't know. We just had a survey that we introduced to our member community to talk about the topic of 24-hour trading. And is it something that the market truly wants, or is it just a small sliver of the market that was asking for it? We're still evaluating the feedback that we got. Most importantly, though, we don't do things without consulting with our members and understanding all of the aspects of the ecosystem and the knock-on effects something like that would consider.
Now, you were just on the main stage talking about the SEC's decision last week to change a rule that would essentially pave the way for the launch of spot Ether ETFs. And many in the crypto ecosystem were excited about it, but also very confused. It seemed like an about-face by the regulator. Were you surprised at all? And has the NYSE been having conversations with the SEC about this decision?
Well, we've been having conversations with the SEC for more than 6 years about Bitcoin ETFs. I think you can't argue with the success of Bitcoin ETFs and the liquidity it has brought to the underlying market. So to me, it's just the next evolution and the next acknowledgement that Bitcoin ETFs have gone so well.
Now, Martin also explains why the NYSE has been focused on crypto as an asset class for about a decade. You'll be able to check out that full interview over at cnbc.com/cryptoworld. Now, as Martin just brought up, a big topic of conversation here on the ground are all the crypto ETFs getting a nod from the SEC this year. Mackenzie also spoke with Catherine Dowling, the Chief Compliance Officer at Bitwise Asset Management, about the performance of the BitB Spot Bitcoin ETF and the potential for Bitwise's Ether ETF to win approval, along with recent progress on crypto legislation.
So I think the big news of the year for crypto, outside of the all-time highs that we saw in March, are the launch of the spot Bitcoin ETFs. Really, it's just been met with these blockbuster flows, a lot of institutions coming into the space. How are you feeling about BitB's revenue so far?
Feeling good. I think, like you said, it was a huge success across the board for all of the issuers. And leading up to that, it felt very slow for the 5 years we were working on it. And then suddenly it was very fast towards the end to get over the hump and get to an actual approval of these products. And I think it's been a huge game changer for the industry to show institutions coming in, to show that these products work. Right? Like, we worked on them for so long from a research standpoint. Bitwise at heart is a research company. That is our core, and that's what we spent so many years working with the regulators to really just show them, look, here's our research. Here's how this product would work. Here's why it's going to be okay. Here's how it's worked outside the United States successfully for many years. And that was a back and forth process. And it's actually a process you want. We could have used it being a little shorter from our perspective, but it's a process you want. You do want the regulator poking and prodding and making sure that this isn't going to be, have a bad impact on the market. And as we saw, taking the academic and the research side to actuality of post-launch, they've been a screaming success, and the fact of having a number of issuers come out at once was really beneficial for the pricing for the ultimate investor because it put some competition out there, which was a very different story from when the Bitcoin futures launched, where it was really a king-making situation because there was one issuer at that point who still has the majority, the lion's share of the assets. So it creates a very different scenario to allow for a number of issuers to come out of the gate at the same time, which was the scenario for the spot Bitcoin ETFs.
Now, last
Good
week,
point. Crypto KJ, in what world does LTC take 30 minutes for you to get it to your wallet? What wallet are you using? It sounds miserable. LTC doesn't take that long. Not for me, anyways. It's never taken that long.
The SEC approved a rules change that would essentially pave the way for spot Ether ETFs. Were you surprised by that decision?
We were pretty surprised. This is public information. We're one of the would-be issuers of a spot ETH product, and it had been many months of silence. There were no signs of life out in the ether, no pun intended. So the thought was that we were leading towards a disapproval order, and we were getting ready. We were looking forward actually to seeing that disapproval order to see, okay, well, what are the bona fides behind it? And then as a research organization, what can we do to help get the regulator comfortable? So we were very surprised to see the shift go and come over towards getting an approval order for those 19B4s.
Aside from the silent period that you mentioned preceding that decision, have you been having productive conversations with the SEC? What did that interaction look like?
Yeah, I mean, from Bitwise's perspective, we've had over the years a number of very productive conversations with the SEC. As they're learning about different products, they want to know. The SEC invites members of the industry to come in and say, hey, we're thinking about this product. So you can have that academic discussion and see, okay, well, what would be the hurdles? What would be the concerns? So over the years, including prior to the spot Bitcoin launch, we've had a back and forth with research information that we've provided, step function in response to different questions that the SEC raised over incremental time periods about concerns and how we would address their concerns about potential fraud and manipulation in the market. So we would provide our research, they would look through the research, we would respond with additional research. And so it's a very productive ongoing dialogue with regard to the research. In fact, actually, in the approval orders from last week, the Bitwise research is specifically called out, which was nice to see.
So many in the industry have said, please legislate, give us hard and fast rules so that we know how to operate within a set regulatory framework.
Hold on, I have to correct something in the chat. Do it. Send some LTC from Trade Ogre to Coinbase. It's slow AF. Crypto KJ, please don't do that. That's probably why you got banned from Coinbase, if I'm not mistaken. You do not send money from exchanges to another exchange like Coinbase. They will stop your account flat. Like, you will get banned on Coinbase. Send it to your wallet and then send it from your personal wallet to Coinbase. Please don't ever do that. Bad advice, Crypto KJ. Get out. We'll wait.
To that end, we've seen more progress this year. So I'm thinking of Fit 21 passing the House. I'm thinking about stablecoin legislation from both the House and the Senate, seeming to be getting a lot more support than past bills that have failed to make it out of Congress. On top of all of that, you've also got Congress passing a rollback of crypto accounting rules that were implemented by the SEC. How optimistic, though, are you that these things will pass before this session ends at the end of the year?
Well, SAB 121.
Yeah, so it depends. Certain exchanges you will get whacked. Like they'll make it I don't know, it'll be just weird activity. It'll flag their system, basically saying it's coming from an exchange that's not KYC'd, or if you're using say Bybit and you're in the US and you have a Coinbase account and you're sending stuff from Bybit to your Coinbase, you're gonna get hung up and they're gonna cancel your account. They're gonna think it's some sort of fraudulent bullshit. So always send it from one exchange to your actual wallet and then out of your wallet to said exchange, right? Like Coinbase or whatever. Just make sure you're safe. It's what I always do. You guys have heard of people getting shut down for going exchange to exchange.
was that repeal went through, so we'll see exactly what happens with the Biden administration on that front. So that's a huge win, and that was like the first foot in the water. But we are seeing a sea change with the receptivity of the Biden administration towards at least embracing and having better dialogue with the crypto industry, as opposed to what the Biden administration has done before, which was really just rely upon the SEC to control the agenda there. So you're seeing the Biden administration step in response to the noise on the campaign trail with Trump making positive statements about crypto. So this is great. It's now become, surprisingly, an issue in the campaign because Trump has come out as pro-crypto and is backing that up with some good facts and forward motion. In response, you're seeing a softening in the Biden administration to receptivity to talking about crypto. The Biden administration.
Real quick, crypto KJ said, how do they do arbitrage trading? Then you can do it between two different exchanges, but certain exchanges will shut you down. Like if you have KYC exchanges like Coinbase, for example, they'll track it and they'll trace it back to see where it went, and then they'll correlate that address with the exchange that's not KYC'd or allowed, right, to be traded on, and they don't want to have any type of intermingling with that, so they will go back and look at it. But like, I don't know, these I don't want to throw shade at any certain exchanges. You guys know the exchanges that I'm talking about that aren't KYC. You can do arbitrage through those two, right? But like if you're gonna do like something into Binance, I don't know how Binance is. I don't know if they're super strict. I assume they are now, or at least Binance US was. But yeah, it's literally just like KYC exchanges. You got to be careful if you're trying to off ramp to fiat somewhere. Don't do it with that exchange, please. Like, yeah, Fully Electric said it's all automatic tracking. Yeah, exactly. And Fully Electric's been in the space forever, so he knows what I'm talking about.
Didn't come out and say back Fit 21, but they didn't come out with as strong an opposition to Fit 21 as they did with the SAB 121 repeal, where they came out with a pre-veto stance. So you're seeing just in a very short time period, a steep decline in the vehemence of the Biden administration against being anti-crypto. So all of that is great. To your shorter question about whether we see anything happen this year on Fit 21, I don't think, unfortunately, we'll see anything with Fit 21 this year, but that's just quite simply because we're running out of time in the congressional calendar, and we are in a presidential election year, which shortens it more than is ordinarily the case. However, just the fact of Fit 21 passing on the House floor, a bipartisan passage, and the number of folks that brought a yes vote for it is tremendous progress.
All right, one last thing before we go. Terraform Labs and Do Kwon reached a tentative settlement with the SEC. The agency sued the company and its founder for allegedly misleading crypto investors before the collapse of the stablecoin Terra USD in 2022. The U.S. District Judge in Manhattan asked the SEC and the defendants to file documents supporting the settlement by June 12. Last month, a jury found Do Kwon and Terraform Labs liable on civil fraud charges. All right, that's all for Crypto World today. You can check
awesome. Shout out to CNBC Television for that. All right, let's move on. We have some videos I want to get to. I want to watch this. Anthony Pompliano is the man. You guys know he's a Bitcoin OG. He says, is the ETH ETF bad for Bitcoin? I have not watched this yet, so let's do it.
What's up, guys?
Oh, bang, God, bang. Sorry.
One of the questions I've been getting recently is whether the Ether ETF is good for Bitcoin or not. On one hand, it could be a distraction. On the other hand, all boats could rise together. Thankfully, I am here to answer your question. Now, I wrote about this about 5 years ago in something called the token density theory. Now, forget about crypto for a second. It's much better to explain it with a regular business. Let's call it restaurants. If you sit at an intersection in a restaurant, let's say in a small town somewhere in America, and there's one single restaurant there, some of the people who live nearby, they come to the restaurant every once in a while. And if all of a sudden across the street, a second restaurant gets built, a lot of people would say, wait a minute, that's competition.
Sorry, I didn't mean to cut him off, but I have to. Crypto KJ. So he said, for the record, my Coinbase was banned after I was using it to buy his Ice River, so his KS0. So he bought a KS0 through Ice River directly from Coinbase. So I bet you anything, the wallet they used was in an exchange. Wherever you were sending that money for payment, I bet that was an exchange wallet, and they were selling it for fiat, and that's why you got hit.
That's bad for business in the original restaurant. You went from one restaurant at that intersection to now two. But let's say that a third and a fourth restaurant all get built at that same intersection. Many people would believe that that's actually bad for the first business. But what studies show is that the density at that intersection of having more than one restaurant leads to all of the restaurants seeing more foot traffic and more revenue. So what happens is that people then begin to understand that this is the restaurant intersection. If I'm hungry, let's just go down there and we'll figure out where we're going to eat. That's the beauty of building density in a certain area all around the same exact type of business. Now, let's go back to the crypto world. That's exactly what we're seeing here. When Bitcoin got approved with the ETF, that was great. We saw over $13 billion of assets flow into these ETFs. And of course, Wall Street, they love Bitcoin. Bitcoin goes up a lot compared to most of the assets that they have in their portfolio over a long period of time. And they now have a way to make money. They can have an ETF, they can charge fees, and it's bringing even more customers to them. So it's a great thing for Wall Street. But when the Ether ETF gets approved, I actually don't think that Ether's ETF is going to be a distraction to Bitcoin. Bitcoin's story is very clear. People know exactly why you buy it. It's a store of value, it protects your purchasing power, and it's this decentralized asset that's competing against gold. No other crypto asset is really trying to beat Bitcoin. Instead, all of the other crypto assets are competing from a technology standpoint. They're all trying to be smart contract platforms or various other types of platforms. And so if you think about in the legacy world, Bitcoin is akin to gold, and then Ethereum, Solana, and many other coins, those are more like Facebook, Google, Apple, etc. Now, the reason why this becomes really interesting is because what we are watching is the legitimization of the crypto industry. Today's episode is brought to you by Property.
Oh God. That went right into an ad randomly. Hold on. Again, I haven't seen this, so I don't know.
Wall Street loves Bitcoin. Wall Street's going to love Ether. Wall Street's going to love Solana and everything else because now they see activity coming in. They understand that if we can get these young investors to go and start buying these assets, we establish a relationship with them. And then we're going to go right back to all of our existing clients. And we're going to say, hey, we now have these new assets that seem to perform better than our traditional assets. Would you like to buy some? And that's what I think you're going to see when the Ether ETF gets approved. Now, I don't think the Ether ETF is going to get more inflows than the Bitcoin ETF got because, again, Bitcoin's story is unique. It's clear. It's different. It's something that people can wrap their heads around very easily. But I do think that the Ether ETFs are going to see inflows. And I think that you're going to continue to see people start to pick which of the technology platforms do they want to bet on. No different than what they do in the legacy world when they're trying to pick stocks or try to figure out which sectors are going to outperform others. That's what we're going to see when it's Ether, Solana, and many other ETFs. But ultimately, we are going to see more capital flow into the overall crypto ecosystem on Wall Street. Because now what you're seeing is not only are investors interested in it, not only are the regulators going to approve this stuff, but also the banks are getting up to speed. You have people inside these organizations that understand the assets, they understand the market, they understand portfolio theory, and they're going out and their sales teams are going to start talking to their clients. They want more people allocating more dollars to these assets, and therefore, that's what they're going to get. Wall Street is incredibly good at distribution. They are way better at it than the crypto industry. And I think that we're going to continue to see capital flow into all of these assets. But don't get confused. Don't believe that because there's going to be an Ether ETF that it is going to hurt Bitcoin. I actually think Bitcoin is going to help Ether and Ether is going to help Bitcoin. Same with every other ETF that gets approved.
I'm with him on that.
And so ultimately, we're on the same team. There's a lot of people that are tribal or maximals in the crypto ecosystem. But you have to understand that every single one of these assets is a net positive in terms of marketing, awareness, capital flows, user acquisition, and continuing to see this asset class seared into the brains of investors. There's this thing called the Lindy effect. The longer something exists, the more likely it is to persist in the future. Well, many of the assets that people are buying, the S&P, QQQ, etc., they've been around for a while. Investors have confidence that they're going to be around in the future. What we are going to see is over the coming years and maybe even decades, that the longer these assets have been in the market, the more people have held them, the more comfortable folks are going to get. There's a familiarity that comes with holding these assets. And so the banks will get more comfortable, the investors will get more comfortable, the regulators will get more comfortable. And so to see more assets flow should not be shocking. And I also don't think seeing many more assets being approved for ETFs over time is going to be shocking either. So now we understand Wall Street can make money. We understand regulators are going to approve this stuff, and they are not competitive with each other. Instead, all boats will rise together. And that's exactly what you should want. You should want to play a game where you can win when other people are successful. Playing a zero-sum game where you have to win at the expense of somebody else or at the expense of another asset is not a game that's usually worth playing. And so it's very good to see that that token density theory, that same thing like the restaurant density at that intersection, the more tokens we have approved in the regulated market, the better it will be for Bitcoin and the better it will be for the overall crypto industry.
Facts. He is not wrong. He's not wrong at all. All right, let's see. Cathie Wood and Bitcoin and Ethereum are about to go wild. Let's see what she's got to say. I think she spoke at Consensus, right? Am I wrong? Let me know in the chat. Let's do it.
What has changed is we are now talking to the major platforms. So we call them wirehouses. So Morgan Stanley, UBS, Merrill Lynch, Wells Fargo.
Although the Bitcoin ETFs are live and have accumulated billions of dollars in inflows in under 5 months,
they are in deep due diligence, like, okay, what is this? We have to have a point of view now.
the vast majority of Wall Street has not bought yet, as the largest indexes and platforms have not listed them yet.
They actually have an index against which they're going to be judged, and that's an ETF, right? Now Bitcoin is part of how they're going to be graded.
And while the Bitcoin price has been consolidating for months, be prepared for what's next.
And while no major platform has yet put any of the spot Bitcoin ETFs on its platform yet, we think that's coming. We can tell from the kinds of questions they're asking.
On Altcoin Daily, you subscribe for one video per day, keeping you informed about crypto. And Cathie Wood at Consensus explains the heat is on.
So the heat is on because this is a new asset class. Bitcoin is a new asset class. It's a monetary system to be sure, but it also represents a new asset class. And what that means in our world is that as a fiduciary, someone looking after portfolios for people, a fiduciary has to consider a new asset class because of the low correlation with other assets in terms of returns and risk. And so if you add Bitcoin to an existing portfolio, if that is right, and this is low correlation asset, what that means is over time, returns per unit of risk will go up. So if one platform has Bitcoin and offers that opportunity of diversification and higher risk-adjusted returns, and another doesn't, then they're going to have a problem if this one's right.
So Cathie Wood is saying that the game theory for these institutions for buying Bitcoin is on, and also the real reason the Ethereum ETFs have gotten approved.
But there didn't seem to be such friction in the Ethereum ETF being approved as there was with the Bitcoin ETF. What is your read on that?
She was one of the filers. She was there.
Oh, the read was it was not going to be approved. It was absolutely not going to be approved. So what happened?
Yeah, did it catch anybody else off guard when they approved the Ethereum ETF? I honestly didn't think it was going to happen when it did, and it was like super quick.
If it were to have been approved the regular way, we would have been getting questions, meaning from the SEC, and no one was getting questions from the SEC beforehand. So that was an indication, no go, just, we'll have to try it again. What happened in 1 week's time?
Lazarus, yes, the ETH ETF is approved. Yeah, it hasn't started trading yet. I think it's going to start trading next month at some point. But yeah, it's been approved, just not open for trade yet.
And I truly believe this was one of the things that happened is there was sentiment evolving around this Fit 21 Act in the House that, wait a minute, this thing is gaining momentum on both sides of the aisle. And wow, this could be an election year issue. This is an election year. So the administration, I think, basically said, oh, and the other thing that happened was former President Trump has become much more cozy with Bitcoin, crypto generally, and that week said he would accept campaign donations in crypto. So again, this idea, this is an election year issue. And then I cannot tell you, I was on the phone with our COO, and he was like, he screamed when he saw this come across, like, what? It was within 3 days of being denied. We were sure. We were sure it was going to be denied. And I think
everybody thought it was going to be denied. Crypto Mikkel said the S1 is due Friday of next week. Interesting. Thank you, Crypto Mikkel.
It was this campaign election year. You've got the legislative branch. You've got former President Trump. You had, rapid fire, and boom, here we are.
And as this crypto market evolves, and as I'm searching for quality altcoins making progress, let's remember the DTCC, meaning the Depository Trust and Clearing Corporation, recognized as the world's premier settlement system, has completed a pilot project on Chainlink.
Now, you touched on this, but DTCC released a report this month highlighting some of the benefits, which you mentioned, but some include real-time, more automated data dissemination and built-in access to historical data. What else stood out to you in the report, and how is this different than how the current financial system works?
Meaning major United States banks are using Chainlink. TradFi meets crypto.
So in the current financial system, all of that data needs to be emailed across many different groups, and the data only becomes available after days or weeks or months. Here, the data can be in an automated way generated by calculating it pretty much on the spot, and so it can be made available every minute rather than every week or every month, and that's pretty significant when you think about this as valuation data that tells you the value of what you're buying or selling. And then the second thing that's pretty significant is the ability to move all of this data and all of these assets across different chains. So there was a dimension here where the data can also go across different chains through CCIP, the cross-chain interoperability protocol that we work on at Chainlink. And the ability to move this data across chains is very important because all the banks, all the asset managers are basically in the process of launching their own chains. And they're going to want to use tokens and consume data from their own chain environment. But all those different chain environments need to be reliably connected. So that's one of the big things that we also work on.
Also breaking news, PayPal's stablecoin goes live on Solana.
As PayPal announced today here at Consensus that its stablecoin, PYUSD, is now available on the Solana blockchain. The development comes about 10 months after first debuting on Ethereum. According to PayPal, the Solana blockchain is known for processing massive amounts of transactions at high speeds with low costs, which provides, quote, significant benefits for the commerce use cases.
And it's interesting, they didn't choose an ETH layer 2, they chose Solana. And
well, yeah, because Solana's fucking cheap. Like if they, I don't know. I mean, I guess the layer 2s are cheaper now with the Denkin upgrade, but it's Ethereum fees are still ass, right? I mean, I guess Solana, the only thing they're gonna have to deal with is the crashes, and they got to take out the video game blowing it.
Hugely bullish news for customers. Gemini users will be made whole.
Announced today that it will
That's a big deal too. So shout out to anybody that was hung up at Gemini losses, because that sucks.
Turn nearly $2.2 billion to customers of the crypto exchange's defunct crypto lending program.
That's after their funds in the Earn program were paused. Withdrawals were paused back in November of 2022.
Now, the Earn program paused withdrawals in November 2022, and customers had their funds locked up ever since. In an email to customers today, the company, which is owned by twins Cameron and Tyler Winklevoss, said that about 97% of the digital assets owed to users by Genesis, Gemini's lending partner in all of this, as of the suspension date, are now available in their Gemini accounts. This comes after Gemini's previous announcement that it had reached a settlement with Genesis and other creditors in the Genesis bankruptcy, which will result in all EARN users receiving 100% of their digital assets back in kind.
Amazing. Real quick, Crypto for Seniors, dude. Thank you so much for the $2.99 super chat. He said 184 people, 59 likes. Slackers, don't be lazy. Hit that like button. Appreciate you all for hanging out.
Now that means
Thank you very much.
lend 1 Bitcoin in the EARN program, they'll receive 1 Bitcoin back as well, as any and all increases in the value of assets since they lent them into the program.
Also join us.
Which is awesome. That's great. So like the fact that they're gonna refund people with the same amount that they actually put in and not the dollar value, that's a big deal, to be honest. So that's amazing. All right, let's recap things and see what we got left over here, or what we're looking like rather, for the Bitcoin price. 68,680 bucks. Hell yeah, Bitcoin's looking great. Ethereum is looking fantastic as well. We got $3,800 basically. We got 3814. Solana almost $170, looking great. Again, Casp is just under 14 cents. We got LTC at 84 bucks. ETC's at $30. Everything is looking amazing. Pepe is actually up today. It was down a lot yesterday. Again, shout out to Crypto for Seniors. Thank you so much for keeping the stream alive. Appreciate you. Google is super glitchy today. Yeah, I noticed that too, actually. Something's going on. We're getting all screwed up. If you guys didn't see...
Seniors donated $2.99.
Why is that reading that?
184 peeps, 59 likes. Slackers, don't be lazy.
What in the hell? I definitely didn't turn that on. I have to figure that out. Why is that on? That's weird. I've never heard that voice before. What the hell? Anyways, if you guys didn't see this, this was the Tech Hustler and Tactical Investing. I keep calling them technicals. I don't know why. But if you guys didn't see this, this is the Karate Combat fight last night, and this is why Tactical Investing actually took it home. But they both put on a great performance. This was the final hit. Oh, the one of the hits in the second round, which was yeah, that was a blow, and that's exactly why he ended up winning this fight. But at the same time, they both fought fantastically, and neither of them got knocked out. That was just one big hit that actually kind of changed the course of everything. All right, let's see. On the day, we have Jasmine. He looks like the biggest earner over here, 18.6% in crypto bubbles. Flashbang, we got 73 on the Fear and Greed Index, as you guys can see. And guys, everything else is looking really, really good. So yeah, that's it. You guys know what it is. You guys know what day it is. It is Friday. So I am going to leave you guys with this. I appreciate you guys for hanging out. I will not be here tomorrow at all. So I'm going to be actually celebrating my 5-year wedding anniversary with the wife tomorrow. So I'm going to be taking off Saturday night. We're going to be sending you guys over to Mr. Max Voltage's channel for SNL. So you guys stay tuned for that. And we're going to raid Miss Randy Hipper in just a second. And I'll be back on Monday morning. So hopefully you guys have a great, happy, and safe Friday. Don't spend all your paycheck money on Bitcoin, and if you do, well, on crypto, if you do buy Bitcoin, please, at least you'll be safe that way. And I will catch you guys on the next one. Let me leave you guys with this, and peace out. Let's do it.
I wanna hold until I can't no more.
Happy Friday, y'all. Let's get over to Miss Randy Hipper. She'll be live in 15 minutes. Stay safe, stay healthy, and buy Bitcoin. Peace, peace.
Eat shit, Gary.